February 25th, 2025. Today, in my pre-market review, I mentioned that there was a reasonable chance that we had some sort of bear trend day today, though not necessarily super likely. And the reason was the daily chart. We had, basically three straight bear bars down, and I thought it was possible we might get a fourth one, but not all that likely. I'm going to start with the daily chart today, just because I think it's interesting. But this is enough to convince me that we're going to go lower. We're probably going to get 2 or 3 legs down to the bottom of the trading range. This could be the bottom of the trading range, the 110 low. Somewhere in this area, we'll probably find support. We could get all the way down to here, 5,700. I don't think this breakout is strong enough to make me think that we're breaking out of the trading range and we're going to start some sort of bear move, maybe down to like 5,500 or 5,000 or anything like that. I think if we got a couple bars that look like this, essentially a couple of 200-point bear bars, then that would be convincing. Or if we had 3 or 4 of these bars that closed on their lows, that would be convincing. But we just haven't had that yet, so I'm not all that convinced yet. But again, I do think we're going lower. We're going to get 2 or 3 legs down. So I am overall, the daily chart is always in short. So I am bearish. Not necessarily tomorrow. I do think we'll pull back. But, over the course of the next few weeks, the next, 8 to 10 trading days, I'm expecting 2 legs sideways to down, lasting, 10 to 15 bars on the daily chart. Therefore, I'm expecting 2 or 3 weeks to the downside. So today, we obviously had a big bear bar closing near its low on bar 3. If you were suspecting a bear trend day, you know that bar 3 probably needs a second leg. You can sell the close of 3 if you want to, or you can wait for confirmation 4, or you can wait for bar 5. I sold the close of 5, expecting some sort of measured move down. I sold more on 7. I thought you could add on 6. It's one of those trades I've mentioned before where you get a pullback after a 3-bar micro channel. It's okay to sell the close of 6 and look for basically a bar range down. So you could sell the close of 6, expecting more down. You could sell below 7. I did sell below 7. The whole move down is a really tight channel, so it's going to go lower. 8, disappointment, but not disappointing enough to get me out of the trade. You can sell below 9. You can sell below 10. You can sell 11 and 12 if you'd like, but you're starting to sell low, and we've had 3 legs down. First leg down to bar 5, pull back 6, and then bar 7, pull back 8, and then now 9, 10, 11, 12. I exited. It's just where my target was, but I exited right here. So the most of it at this price, and then the rest above 13. Thought you could buy above 13 for a scalp, since you know that always in bear they're going to exit above 13. However, for the next few hours, really for most of the day, or usually at least most of the day, you should be cautious about buying after this much downside, because this much downside is likely going to lead to a second leg down. Today, it didn't quite end up happening. We ended up getting a pullback and then a trading range, but I still think we go lower. Again, we might pull back tomorrow, but I still think we end up getting going lower overall. So 13 and 14 should probably get a second leg, but you got it on 16 and 17. It's not really all that great. You can sell below 18 if you want to, expecting that the bulls are going to exit. Bulls who bought for any reason have to get up below 18. So you can sell below 18, taking a chance that we get some sort of small second leg back down to the bar 13 low, since we should retest the extreme. 19 is follow through, a large tail on the bottom, but follow through. We might have to pull back first, and you can see we do when we test the 18 low, the breakout point, and then we get another leg down back to the bar 13 low. This could be looked at as the second leg for the Bears. I personally thought we were going to get a little more. I thought we might pull back for the rest of, or for a couple hours and then get a little more. But this is kind of something to think about. We have a sell off here, and then we went sideways, and then we continued down, and that caused the big bear trend. When we have a sell off here, and we started to continue down and then reverse up, your mind should be thinking a little bit more about a trading range than getting an immediate second leg down after a 10 to 15 bar pullback like we got that other time. You can buy the close of 30. You could probably buy above 28. We should get should get a second leg up, but I think it's a little bit risky to be buying the first close of the moving average. But you can buy the close of 30 consecutive bull bars closing above the moving average. There's nothing wrong with that. I bought the close of 30 and I just got out below 31. I thought that it was, I did pretty well today, but I lost money yesterday. I wanted to be clear about that, since I didn't make a video yesterday, and I don't want to just make video. I don't just make videos on the days that I win. but I did not make money yesterday, but I did make money today. I made more today than I lost yesterday, but not by like a large sum. So I ended up shorting. My logic was I thought that this tight channel down might need a second leg, and I'm really cautious about buying micro channels against a tight channel down because I've just seen it go wrong a lot of times. My read was obviously incorrect today, but you could have bought the close of 30, which I did. I exited here, and I shorted during 35 and just exited as it was pulling back. Took a small loss on that. You could have bought 35 or probably better 36, 37. I would not buy 40, 41, 42, 43 because it's 3 legs up. 1, pullback, 2, pullback, 3. And the thing about third legs is the market will often trade above third legs and then go back below them. It will often trade below third legs and then go back above them. So like a trader who buys the low of 41 with a stop, a measured move down, and a limit order here probably has at least a 60% chance of making money. So I wouldn't buy these closes, but you could buy the 41 low during 48. I think that's a reasonable trade. 45, 46 consecutive bear bars. You could sell below 45 knowing that bulls are going to exit. The real key is learning where traders are going to exit, right? So learn where bulls are going to exit and you can enter short. Learn where bears are going to exit, you can enter long. 48 is the second leg down. I don't think there's anything, it's not great to sell below 48, but you can do it. But the thing is, if you're going to sell below 48, you have to have a good expectation. And if you're going to sell below 48, you probably want 49 to look something similar to 48. You're selling, taking a chance that the second leg for the bears has started. And if you're selling to close at 48 and you get 49, a bull bar closing somewhat near its high, that's probably a decent hint to you that the second leg is not going to be what you think it's going to be. Or, it's not what you want, right? So bears exit above 49 and bulls can buy for at least a scalp. 50 and 51 are okay, but I'm hesitant to buy up here. I did buy the close of 51 and just got out on the close of 53, so I took a small loss on that as well. I thought that, I thought we were going to go a little higher. I thought we had to go at least above the bar 44 high today since 41, 42, 43, 44. I thought that should get a second leg up. So I expected we would at least get back up to this high at some point today. 53, 54, 55, it's big up, big down. You can sell one of the closes, basically taking a chance that we run the stop below the bar 49 low, which we do with 3 legs down. I made a mistake and sold down here and took a small loss here. I was still green on the day, not a whole bunch at that point. And then I bought the close of 63, 2 really strong bull bars and another bull bar closing not near its high, but decently. And there's a reasonably high chance that you get at least a leg 2 up. So I bought. It came within 1 tick on here. It hit my profit target on the SPY. But I bought and I went for a second leg up and I got filled. And that was my final trade of the day. But you can buy the close of 63. The problem is that we have a sell-off from 52 through 60, which might need its own second leg down. So the upside is limited. Also, these sort of 3-bar microchannel sort of trades are a little bit less reliable late in the day. They're a little bit more reliable, at least from what my study's shown. It's a little bit more reliable early in the day and a little bit less reliable late in the day. So you do have to be careful about that. As far as buying, selling below something like 68. The only reason I'm bringing that up, it's a tight trading range. It's not a very good trade, but I considered exiting below 68. I thought that it might need a second leg, but I wasn't super sure, so I did not end up doing it. And I know that had I sold 68, I'd be disappointed in 69. So you can buy above 70 for at least a scalp, and then you get it at 71. And then obviously sell off 72, 73, 74. That's going to get a second leg. 77 might qualify, but either way, we should go at least a little bit lower. So basically a bear channel day or a bear spike on the open and then a bull channel for the remainder of the day. Like I said, I misread early in the day, or not early, but around bar 30. I thought we were probably going to go a little more sideways and get another leg down. And we ended up rallying. We obviously ended up closing the gaps because it's a trading range day. Right? We got back to the bar 3 low over here. So that was a gap that needed to be closed. And obviously we closed this gap earlier in the day. So as far as the weekly chart, the bears are trying to get a good follow-through bar. They have a few more days to do so. And if they get a really good follow-through bar closing near its low, there's an increased chance that we can go lower if we get consecutive strong bear bars closing on their lows. The monthly chart is closing soon, and it's pretty important. If we get a big, let's say that we sell off I don't know, another 100 points, and we close somewhere down here, that would be a second reversal down. And let's see if it trap traders out, 63.75. Yeah, so we went one tick above this high, which means the bears who sold below December and then got trapped and put a stop above here got trapped out. So now we're getting a second entry. So if it becomes, if we get another 100 points to the downside over the course of the next couple of days, that's a bear bar closing near its low, and the bears have a credible argument for a second entry short. But that has to happen first. If we get a disappointing bull bar, it's probably just going to be more disappointment for the bears. I believe that is everything I wanted to cover. Yeah, that's everything I wanted to cover. So